JT Pells, the tax quarterback. We were actually talking with somebody here in the office about this earlier. Why would somebody form an LLC? Because it's not for taxes generally. There's actually a different reason that most people don't realize. So what's the purpose? Why would someone create an LLC?
One is so you can pay extra fees to the state. No, I'm kidding.
Yeah, we don't like that. Maybe the government does.
Yeah. Why you're doing it is for liability protection. So if you're a business, if let's say you are a body temperer and you're picking up weight or a massage therapist and you're really digging your hands into somebody, using tools on them, and your hand slips and you hit their ribs or something. Now when that person goes to sue you, they can just sue your business, not come after like everything that you own, like your house, your car, any other personal assets.
So LLCs mainly are for liability, like legal purposes.
Yep. Yeah, it's just liability.
What about tax-wise? Or does it help? Like what happens?
No, it doesn't help you tax-wise. Well, it allows you to pick different tax structures, but it gives you options. But most people think that when you get an LLC, it's like, oh, now I'm going to save these taxes. It's like, well, no, you got to take it one extra step further. But having an LLC, it does allow you to be taxed as what's called an S corp, a C corp, partnership. You could do a nonprofit. So it allows you to basically almost pick your tax rate, for lack of a better term.
So it almost sounds like a starting point. Like for basically,
yes,
for almost any new, obviously this is a blanket statement, and I'm sure you can insert some caveats. Generally, 99% of the time, then, would you say it's advantageous for damn near every business owner? Start with an LLC, open it, liability, take care of it, do everything right. Would you say generally that's going to work for most people?
Yeah, for 99% of the people, it's going to work if you just open one up when you start. And then, as we always say, wait till you start making some money. That's when you have a tax problem. Because, like we were talking to somebody earlier, they're like, "Oh, I want to like plan all these taxes," and we're like, "Dude, you lost like $70,000. Like, you're not paying taxes. Taxes aren't your problem. Your problem is cash flow."
Yeah.
So we tell people, get the LLC first. Then your next thing, focus on making as much money as humanly possible, or as much money as you want to make.
Yeah.
Because some people may not want to work, 20 hours a day, banging out everything.
So you mentioned earlier that forming an LLC gives you a choice in terms of how you're taxed. What do you mean by that? And for somebody just starting out, let's use the scenario you just presented, right? Brand new business, haven't paid taxes yet because maybe they're making a little bit of money, just something on the side. What should they do after they get an LLC? What other steps? What do they need to do about taxes? Like tangible things.
After you open up the LLC with your state or locality, I would immediately take that information that you get, go get an EIN number, which is your employer identification number, or the social security number of your business. After you do that, go immediately do two things. Open up a checking account, business checking account. It could be your local bank, credit union. You could do it online. And I would open up a business credit card. Same thing, in your business name or your business ID number. And then what that's going to do is it's going to allow you to separate. These are business expenses. This is business income. Because what can happen is when, as you guys know, if you're filming this April 10th, your accountant's going to ask you, hey, what's business, what's personal? And if you've all been putting in your personal checking account, you're going to be like, I have no idea. And then your tax preparer, tax professional, going to tell you the same thing. Well, then I don't know. If you don't know how much you made, we can't help you. And then there is a lot of truth in that.
It's interesting you say that because I think most people would think, oh, I got my LLC, I got my taxes taken care of.
Yeah, a lot of people do.
It almost sounds like, from what you said there, the point of, or maybe not the point of your LLC, but like a big benefit of that and like tracking everything for your tax preparer is almost like for yourself. Because then you know where your money is or how much you got to pay in taxes or whatever.
Exactly. It's we got this from another accountant or CFO, I guess. It kind of gives you, like you said, clarity. If you don't know where you are, me as a tax professional aren't going to know where you are either. For example, if you're traveling, right, let's say somebody's like, hey, I'm lost. Your friend probably says, hey, send me a Google pin. Send me a screenshot of your map because they're trying to tell you where you are. But if you come to me as a taxpayer client and said, hey, I want to save all these taxes, I'm paying so much. Okay, cool. How much did you make last year? And you say, I don't know. I can't give you any advice because I don't even know where you are. right? I can't tell you to get on the freeway. You might be in the country for all I know, and that's the wrong way.
And in terms of an LLC or an S corp, or what were some of the other ones you mentioned?
C corp, nonprofits, foundations, yeah.
And that, I assume, also matters for you as the advisor to tell the person, hey, you're this entity, or you need to change to this one. I'm guessing that's also part of like the roadmap analogy you just gave.
Exactly. So I'll give a concrete example. If you're a single member LLC, you just started this year, and you realize like, man, I feel like I'm paying a lot in taxes, it's because you are. Single member LLCs have this extra 15% tax called the payroll tax or self-employment tax. You can get rid of that by switching to a different type of entity. But there's also some added administrative costs, and we typically say, just to give a concrete example, if you're not making $50,000 in profit, we don't recommend switching to that. Why? Because it comes with different, you have to file an extra tax return, you have to do payroll, you have to do all these other administrative tasks that may not be outweighed. But again, if you come to me saying, well, I think I made 30,000, it's like, ugh, but you actually made 70, I can't give you that advice because I'm guessing. You know, same thing as, we like to use it as, you know, like doctors. Drew, you could tell me, if you called your doctor right now and said, hey, I just hurt my knee, I'm playing soccer, I need ACL surgery, would your doctor be like, okay, cool, let's get the anesthesiologist, we'll see you Tuesday?
Oh, definitely. He'd sign me up, not do an X-ray, MRI,
Yeah.
nothing.
Right.
Wouldn't even look at
Yeah.
it. Would just sign me up for the operating room.
Yeah, then you come in Tuesday, prep for surgery, you're like, oh, my bad, it was just a bruise. Like, I don't, the same thing with us. We need you to have everything and come correct, because we could be giving you information that could kill your business. All of a sudden, if we've said, hey, let's do this S corp thing, and it's like, well, damn, now I got like $4,000 or $5,000 in compliance costs. That would kill your business. I mean, I'd have an extra $5,000 just to waste on something that I recommended half-heartedly. I mean, we had a client the other day that, you know, she called me and said, well, my accountant told me to do this. And I asked her, I said, did you give him any numbers? Well, no. Did he know what you made? Well, no. And I said, well, I hate to tell you, I said, I hope he said, take this with a grain of salt, was that you basically asked him to come pick me up and you didn't give him directions. And I said, by you not telling him how much money you made, he can't give you the right advice. And unfortunately, you know, she came to us after after the new year last week and was expecting us to perform surgery on something that should have been done, honestly, probably 2 or 3 years ago for her. And, you know, it's one of those things where we can't help. And she's like, yeah, I understand like why I need proper books, because that's huge. She owes an extra $3,000 in tax this year. Had she called me before the end of the year, we could have brought that number down to like 600, but you know, she didn't know. And it's the same thing as you have to know your numbers. It's not boring, it's not sexy, but if you don't know where you are, nobody's gonna come pick you up and find you.
Yep. Yeah. I mean, numbers, entity status, right? And
yeah, it's not sexy.
It's not, but it's necessary though.
It is.
Right?
It's
because
it's
you
the
don't
fundamentals. For you guys that are sports fans,
in the middle of the season.
Yeah.
Like an Angels in the outfield.
Yeah. Kobe Bryant was a very, very good basketball player. When he was younger, you know, he was a high flyer. I think he won the dunk contest. I mean,
I don't know. He probably did at one point.
But point being, he was a very good athlete. Like he obviously was at the end of the year. But after he hit probably age 30, like he wasn't really soaring through the air, but he had those good fundamentals. He had the footwork. He could hit mid-range jumpers. He did the stuff that wasn't sexy. But where you look at somebody like Dwayne Wade, who hit a brick wall because he got by on his athleticism. And at some point, your athleticism is going to fade. It's the same thing here. You can get by, like, not tax planning, but at some point, like, we had a client, Frank, I mean, he was paying obscene amounts. What was he paying, like $80,000 or something?
I thought it was more than that. It was close to six figures, yeah.
Where he's a good businessman, but all of a sudden, we were like, hey, and we got it down, I think, to like 30,000. And he was like, and he was like, oh my God, this is like so helpful. And just like that, like he got by on natural talent, but he was like, now he makes a lot of money, but even he was like, I can't just keep paying like 90,000. This just doesn't make any sense.
Yeah.
So that was where we helped him. We helped him set up a strategy. We helped him set up the foundation. And now, I mean, we told him like, you can easily pay a lot less in taxes than you were. Like this is very, very doable.
Yeah, and that's the thing. In that example with Frank, as we'll call him, it was bookkeeping and running numbers and tracking everything to get it right. But then also for him, one of those huge things was also entities, because he was
Yeah.
basically set up wrong. And
Yeah, he had an LLC, and he was like, I got an LLC. And it's like, there's a few more steps we took, and even his lawyer was like, yeah, like, thank you guys for doing this, because like, I'm not an accountant, like I can't, I'm not going to override his accountant. But yeah, he went to a tax preparer that he saw once a year, and he never got any advice. And now he'll probably never leave us.
yeah,
Unless
that's
we
true.
did something incredibly stupid.
Hopefully not.
No.
I'll say this: with the amount we've saved him in taxes in 1 year, we'd have to do something really, really stupid.
Yeah, we would. We don't do that.
But yeah, I mean, entity structure, books, like you said, clarity, it is super important. And one of those things is an LLC. And so for anybody listening, of course, if you got a business, that's a great place to start. There's obviously YouTube and Google University, or you can just come work with us, because we're always going to hold your hand, point you in the right direction, and make sure you pay as little in taxes as possible and never leave a tip for Uncle Sam.
Damn straight. No tips.
So if you guys enjoyed the video, obviously, and you learned something, hit subscribe, and we will see you on the next one.